Welcome back to the Barbecue Investor. Wow, we're at Wednesday, midweek. A lot of things going on in the market today. Chat is going to have a great report. Okay. We had some GDP data, we had sales data, we had PCE. You know, and I'm not saying any of it is enough to like say we're going to go into a recession, but there's enough doubt and enough bad numbers that I think we're definitely not going to see a rate cut for quite some time. And I think it's probably likely that we get a rate increase. And I know that's not what everybody wants to hear. And probably that's not what everyone expected when we had a new Fed chair. But you can't change the data. So we're going to have to see. Crypto is hanging tough. I'm kind of surprised. It started to go down earlier today, and I thought, could this be it? And it still could. I just don't know, but it's holding pretty strong. The ETFs are really picking up. The whole crypto thing could change, guys, because institutional investing and now these ETFs, it may not be the same volatile asset we've grown to know. So, which could be a good thing long term. But we just don't know enough about it yet. So my thesis still on the entire market, and I'll tell you right now, I still believe that we get a 10% or more pullback on the S&P 500 before the end of the year. And my belief is that if we get that, then we will probably see a 20% plus pullback on Bitcoin and other cryptos. So the last couple of weeks, I'll just tell you, I have been trimming from my portfolio. I've done really well with my Amazon, my Google, my Meta, my Microsoft, my SoFi, SPMO, which is probably my favorite ETF. I've done really well with those the last few months. So I not only trimmed those profits, but I took a little bit more, and I'm probably setting about 40% in cash right now. So if we get the pullback, then I'm positioned really well. If we don't, that's fine. I've still got 60% in the market. I'll ride it. I've got screeners out there. I'll find some undervalued assets to either get back in on, or when crypto has a pullback, I can get back into some crypto, but I'm not going to chase anything. That's the one thing I've learned from investing is just do not chase. Don't let your emotions override. I had a thesis in my mind what was going to happen. So in my mind, if that's going to happen, I felt like the best thing for me to do was to trim my profits and just a little bit extra so that if we get that 10% or more drop, I am positioned really well. I can get right back in there and I'll get after it. So today, farming wise, hey, I got some things done. So starting to get moving around a little bit on the farm. That's good. Starting to see a little dust flying in the air around here from some other farmers. So, that's exciting, and that'll be more dry powder for me this fall. So we're going to see what's going to happen. I'm excited for what's coming. I'm excited for this pit report because I've already seen parts of it from chat, and it's going to be a really good one, guys. So, you know what? And barbecue, I always had this saying on Saturday mornings, and that is, let's kick the tires and light the fire, chat. Let's get that pit report going.
Tonight's market story starts with a contradiction. Growth slowed, but demand didn't collapse. Inflation cooled month to month, but it is still nowhere close to a clean victory. Second quarter GDP grew at a 1.5% annual rate, down from 2.1% in the first quarter. But private domestic demand was revised up to 4.2%. July PCE inflation rose 0.2% for the month. Headline inflation stayed at 3.7% from a year ago, and core PCE was 3.3%. Real consumer spending was basically flat, so the message is not recession, and it is definitely not mission accomplished. The economy still has a pulse, inflation still has teeth, and that keeps the Federal Reserve, the dollar, and long-term yields right in the middle of every stock and crypto decision. Next up is Jackson Hole. The symposium begins tomorrow, and this year's theme is financial innovation, payments, and policy. That puts banks, stablecoins, tokenized assets, and the plumbing behind digital money on the same stage as the rate debate. But the biggest market moment comes Friday morning when Fed Chair Kevin Warsh speaks. Investors want to know how this Fed balances sticky inflation against slower headline growth and unusually high long-term yields. Treasury is also increasing its long-end liquidity buybacks in September. Important distinction: those operations can improve market trading conditions, but they are not quantitative easing, and they do not make the government's borrowing needs disappear. Bitcoin held near 79,000 late in the session, with real ETF demand behind it. The simple framing is this: fund flows are a tailwind, the dollar and yields are still the weather. Now to the geopolitical pressure point. Iran and Oman are negotiating a framework for commercial shipping through the Strait of Hormuz. Oil eased as traders priced a chance that more traffic could move through the corridor. But the details are not finished. Military vessels would reportedly remain excluded, and normal shipping has not returned. Before the conflict, roughly 1/5 of global oil and liquefied natural gas shipments use this route. That makes every credible step toward an agreement bearish for the fear premium. It also makes every breakdown a potential inflation shock. Oil is not just an energy story here. It reaches transportation costs, inflation expectations, bond yields, consumer confidence, and eventually the valuation investors are willing to pay for growth stocks. Diplomacy lowered the temperature today. It did not remove the risk. Time for a quick lap around the 4-lane experiment. Brad's current Robinhood marks put the broad market lane up 0.9% since launch. Sonnett's agentic lane is up 0.7%. So for now, the boring benchmark leads the artificial intelligence lane by just 0.2 of a percentage point. The cycle lane is still accumulating until November 1st, which means its official score remains at its 100 baseline, and the machine lane has 3 open challenge trades, but no closed trades yet. That lane is unscored until positions actually close. This distinction matters. Open marks tell us what the scoreboard looks like right now. They do not give us a final win, a final loss, or a verified return for the lane. Receipts first, conclusion second. Inside the machine challenge, Bitcoin currently shows plus 7.93%, Ether is plus 7.65%, and SUI is minus 7.54%. In the separate research book, Hype is plus 4.39%, Pengu is minus 3.69%, and ADA is minus 5.09%. Across all 6 open regime strategies, 3 are green and 3 are red. That is exactly what automated regime systems can look like when different markets are responding to different conditions. It is not a 3-3 win-loss record. Every one of those readings can change before the trade closes. Virtual is different because it actually closed yesterday. That separate research trade finished with a 15.25% gain after fees. We are not publishing the remembered historical win count until the full closed trade ledger is verified. Closed receipts count. Open marks stay open. Sonnett's last successful journal entry caught tonight's setup early. It flagged NVIDIA earnings as event risk for the semiconductor ETF, then chose to hold the diversified position instead of pretending it could predict the reaction. Fresh journal decisions are paused behind a broker connection safety check. That means today's 0.7% is a current broker mark, not a new AI decision. In the paper labs, the Google September 340 put remains down 16.04% even after rebounding 15.43% today. Ether remains open, up 10.66%. The 2550 take profit is visible at the broker, but the audit did not find a live protective stop. That is not something to hide. It is exactly the kind of operational scar paper trading is supposed to expose before real money is at risk. The Penny Lab found plenty of motion today, but not enough verified meaning. The 3 p.m. central scan saw 298 movers, returned 200, and marked 87 as market eligible. But coverage was incomplete, Catalyst classification was unavailable, and more than 9,000 Sonnett review requests remain pending while the decision adapter is disabled, so the correct editorial call is simple. The scanner works. The research gate stays closed. Fast-moving tickers can be useful data without becoming investable ideas. We are not turning velocity leaders into recommendations, and we are not filling missing catalyst research with a guess. No penny picks tonight, just an honest systems receipt and a clear list of what has to work before the lab earns the right to make a call. And now, the main event. NVIDIA did not merely scrape past expectations. Revenue reached $96.2 billion, up 106% from a year ago and roughly 4.4% above consensus. Data center revenue hit $89 billion, up 117%. Adjusted earnings were $2.22 per share, about 6% ahead of expectations. Then came the guide, $108 billion for next quarter, plus or minus 2%. That midpoint was about 3.7% above the consensus cited before the report, and it assumes no China data center compute revenue. Vera Rubin is in full production, management says supply is still constrained, and Amazon Web Services is expected to deploy another 2 million NVIDIA GPUs across 2027 and 2028. The demand story did not break tonight, it got stronger. The stock's reaction told its own story. Shares initially slipped or stayed close to flat after the release. Then the conference call changed the tape, and NVIDIA moved roughly 4 to 4.4% higher after hours. Investors responded to accelerating demand, the Rubin production ramp, the massive AWS deployment, and management's expectation for about 70% revenue growth in fiscal 2028. But this was not a flawless report. Gross margin is expected to move from 75% to roughly 74% next quarter. NVIDIA is also supporting parts of the AI build-out with investments and credit arrangements, which keeps the circular financing debate alive. Management says the exposure is controlled. Skeptics say it deserves scrutiny. Both can be true. The demand is real, execution is remarkable, and the valuation still leaves little room for disappointment. For stocks, the AI thesis survives. For crypto, NVIDIA did not create a decisive signal. Inflation, yields, the dollar, oil, and Jackson Hole remained the bigger weather. NVIDIA strengthened the growth story tonight. It did not make risk disappear. This report is for education and entertainment, not individualized financial advice. Back to you, Brad.
Great job, chat. So, NVIDIA did it again. They always crush what everybody thinks they're going to do. But they still, 7 out of the last 12 quarters, 48 hours later, the price still goes down. So I think expectations have gotten so large for some of these AI places, but especially NVIDIA. I mean, they're the largest player out there right now. So, didn't seem, I think it was up at 1.6% after the call. Now it's down to like 4%. I wouldn't be surprised if 48 hours from now it could be down. I don't know. I never try to invest into anything before earnings. It's too hot and too cold. You never know what it's going to do. Even when they win, many times it still goes down. So, anyway, guys, a lot going on. We still have Jackson Hole coming up, and then we'll have the comments from the Fed chair. And man, so far he's been like really hard to read. He's never hawkish. He's never dovish. I would hate to play poker with him. I'll tell you that. So I don't know that we'll get much out of that. We could get, I think people will be trying to read a lot of things into it. So we'll just have to see. Let's see how crypto holds up over the next 48 hours or so. We still haven't broken 82. If we can break 82 and hold it for a day or two, for a couple bars, then I think there's a pretty good chance that maybe the low may be in. But my thesis, you know me, and I'm not trying to be bearish. I'm not bearish. I'm still very positive about the market in general. I just still think it's midterm year, and looking at the historical patterns, I still think we have a pullback. I still think there's a possibility that the low may not be quite in crypto. It could very well be. I'd say that probably the chances are, if I was guessing, I'd say probably about a 60% chance that the low is in, but I still think that we'll get down to the low 60s at least again, possibly even come close to that 58 mark again. I don't know that we'll get down into the 40s like I at one time thought we would. Depends. We could have some black swan event, but I don't anticipate that. So I'm kind of hard pressed right now because my strategies, I've got some that are in active trades, and obviously I'd like to see them do well. But on the same token, I've got a lot of dry powder that I had set aside just for DCAing, and I did not get as much as I wanted. So I would love to see it come back down again so I could really load up for this next bull run. But if it doesn't, you know what? I'll still try to find the pullbacks. And honestly, guys, even if I bought right now, which I'm not going to buy right now because we're chasing, I know there'll be a pullback. But if you bought right now at 78,000, let's say 3 years from now, we're at 150 or 200 or 250 or whatever it is, 78,000 is going to look like a steal. So if you bought something right now and it pulls back, don't panic and sell for a loss. In my opinion, if you've already got in, just ride it. I mean, you're going to be fine. I'm waiting for a little bit more of a pullback just because I think right now I'm averaging like around a 58.7. So I would love to be able to keep it under 60,000 for my average for my DCA, but if I'm just in the 60s, guys, I'm going to be thrilled because is it really going to matter when the price is 200 or 250,000 in 2029? Not really. So, hey, hope you all have a great week. Let's get after it. Got some farming to do. Not going to be cutting any beans yet, but I got a lot of things to get ready. Get some grain carts out. Get my combines out. It's about time to start having some dust fly for my farm. So, I am Brad, and I am the Barbecue Investor. And smash that subscribe button. Smash that like button. And we'll see you all Friday.